It is fair to say that after the financial crisis and its still ongoing consequences, consumers have totally lost confidence in the financial institutions. Consumers were the least well-protected group during this financial crisis, and their interests have not been taken into account. And one of the lessons of the crisis was that financial institutions and intermediaries have to learn to put their customers first. The financial sector should at last serve the real economy. Can you imagine that it's more complex to produce and sell a yogurt rather than a very complex financial product which can have huge financial consequences for consumers? We also observe that financial institutions do not seem to be aware that they really have to fundamentally change their approach towards their clients. Look at what they're doing. They pay out bonuses to the top executives while having received money from the taxpayers. So that means that the financial sector is not adapting naturally to new regulatory needs. What consumers really need in the financial sector is access to a basic bank account, the possibility to switch easily a bank account if you're not satisfied with your banker, responsible credit, safe investments, transparent fees and fair fees. And in order to make this happen, we need rules. We need consumer-friendly legislation in the financial sector. Consumer-friendly legislation is certainly important, but it's only part of the picture. Because in order for it to be effective, you need also strong enforcement of this legislation. And another lesson of the financial crisis was that this has not been the case in the past, and that financial supervisors have not used their powers in order to enforce consumer protection rules. We need strong, independent, well-resourced supervisors that help consumers to be protected in the financial area. This will be good for consumers, and this will be good for the whole economy.